Most accountants hide behind spreadsheets. Today's guest is not one of them. Sam Millward from Accounts and Legal, and if you've seen him on LinkedIn, you'll know him as the accountant who tells it exactly as it is. He's helped entrepreneurs restructure smarter, exit cleaner, and actually understand what the finances are telling them. And today we're going to dive into all the good stuff. So if you've ever sat in front of a tax bill wondering what the heck went wrong, then this episode is for you. Sam, welcome to the show, mate. Let's get into it. Really, really nice to see you in the flesh. I want to start by asking you a question, and I've heard you say it. Stop being a tight arse. And it was in relation to owners of UK businesses still doing their finance in a very much a DIY fashion.
Okay.
Why do you think people still do that?
I think there's a lot of pressure on business owners to bootstrap their businesses. Costs are going up left, right and centre, depending on what industry you're in. Suppliers are going up, staff costs are higher. So it's a lot, it's very easy for business owners to think, where can I cut costs? Mm-hmm. So the natural instinct, I think, for someone who isn't finance minded is to not spend on stuff like that where they don't have knowledge in that space, so therefore they don't know what they don't know.
Yeah.
And they might think they know enough to do it themselves, so therefore in their head it's an easy cost to justify not splashing out on. But that's the risk, right? You don't know what you don't know. So I've had no end of clients come to us eventually where even say they've put their own cash flow forecast together or something, you look at it and you go, well, where's this and where's that and where's that percentage of your sales that you should be putting aside for maybe VAT or corp tax? There's none of that factored in. So that's why your cash flow has gone to shit. Mm-hmm. And so you get into this flow of running your business off just your bank balance because everything that you try to put together yourself is rubbish. So I think that's where businesses go wrong, And
I think some of the problems as well is you've got like the marketing of like Xero or QuickBooks is you can do it yourself.
Yeah.
I don't think you can. I think like if you're not got some basic bookkeeping. I mean, I'll share a story. Emily, who's just coming here, right? Yeah. When we a few years ago, I've said to her, I weren't even doing management accounts. Like I was very much. It's embarrassing. Listen, I've got this coming in this month. My costs are about here. We're sweet, It was like, and I said to my accountant, I says, do you do monthly management accounts? Because I'm being told that I need them. He says, no, we don't do them. He says, Chris, we'll do them every quarter. Yeah, I'm going to come on to that as well. Yeah. So I said to Emma, I said, listen, I said, what you like at bookkeeping? She went, doesn't look that hard. I went, come on then. I said, she'll kill me for saying this on a house in there. She's amazing at other things, I must say, in the business. But anyway, so we've done it for about 18 months. And I'm looking at everyone, I'm thinking, that don't look right.
No?
Nah, it don't look right. I've gone to the accountant, he says, Chris, it's there's a lot of errors here and it cost me thousands to fix it, and my initial thing was like you, I'm going to try and save some costs. It's not that important, but again I sort of was into the false belief that, well, look, it looks so simple, anybody, and that's what they sort of advertise it as. So it's I think the big problem is business owners, they don't see finance as an investment. They see it as a cost. What are some of the biggest horror stories you've seen with people doing things like their own bookkeeping, their own cash flow forecasts?
So something that comes to mind is a coffee shop that I've worked with in the past, and I won't say the name of the coffee shop, but they had a big issue around pricing, and they were sort of underselling their services a little bit compared to maybe other coffee shops in and around Liverpool. But they had two issues really. So they didn't want to spend on the finances, so they were doing their own bookkeeping. But then I think they were too empathetic as a business owner and didn't treat it enough like a business. And when I say empathetic, I've spoken to, it's husband and wife, spoken to the lady before and talked to her about pricing, and she's like, but it's, it's that person's enjoyment in the morning, and I can't it can't be £4 a latte, I need to keep it under XYZ. So I had a look at their books for them and pulled together a cash flow forecast. and this was them pre-VAT registration as well. So you got that thrown in there. They've maybe got to go VAT registered in the short term, and they thought they were doing okay. But when you factor in, if they were to go VAT registered now, how much they'd have to put aside for this, how much they'd have to put aside for corporation tax, stuff like that. Salary costs have just rose, so employers' NI's increased. You factor in all these things, without thinking about it, they're actually hemorrhaging cash every single month. They were negative, and that's pre-looking at increasing the prices. That's pre-going VAT registered. You throw all these things in, and if they don't flex their pricing, they'd be fucked.
Well, they could end up with someone like us.
Yeah,
and that's the truth, isn't it?
You know what's interesting? They did before.
Yeah.
So this is their second. This was their second stab at it.
Wow.
So they had a poor accountant originally that didn't advise them properly around having clear data pre getting registered for VAT. They eventually got registered for VAT. Their bookkeeping was a mess. They weren't claiming for everything they could claim for. The data wasn't structured in a really good way. They ended up falling on their arse because all of a sudden they get hit with a VAT liability they haven't really planned for in their pricing, putting money aside. They had to liquidate because then all of a sudden they didn't have the money to pay HMRC.
Wow.
Bonkers.
Did it go into liquidation the second time as well?
No.
Right.
No. So
knight in shining armour comes.
Yes.
from Wolverhampton.
There we go. Yeah. Up the wolves. But no, we sorted their pricing out into something that is still actually not expensive. I don't think it's seen as expensive when you look at their competitors as well. So we got them in a position where they've got competitive pricing. They are not hemorrhaging cash every month. We planned their pricing in a way where we were also thinking ahead and thinking about VAT registration in the distance, and we're thinking, right, okay, this pricing, let's say you were VAT registered now, how would you be affected? Would you be okay? Because you got this thing with product businesses where, let's say you choose your price and then you go VAT registered, well, your margins are slammed by 20%, aren't they? So, but then are you going to change your pricing again, and then it's customer perception? Mm-hmm. You're pissing about with your pricing all the time. Mm-hmm. So we're like, hang on, so we're doing this repricing exercise now, yeah? But you know this is going to be a success. You know you're going to hit that threshold at some point. So let's pretend you are now, and let's get used to it. And yeah, your margins will be better for a little bit, but let's get in the habit of putting that money aside, and let's see how you fare. And they have done, and they've got this really sweet process now where we've got this separate tax savings account, and they put 20% of their sales aside every single month. Mm-hmm. It's not their money, they're collecting it on behalf of HMRC, right? But that 20% is over-egging what their quarterly payment is. Yeah. Because all of a sudden you're getting a discount on some of your expenses, right?
And every 12 weeks you've got a bonus, I suppose, yeah?
Exactly what we've done, yeah. So they had this really negative perception of it because it was the devil, like it knackered their first business up. Mm-hmm. Now they quite like it because it's like, oh.
How easy is it to do as well, though? Because that was one of the things that I implemented when I started to get a bit more savvy, is we used Starling at the time, and you could just have a space. You would put 20% of your 20%.
Monzo do it as well. You set up a tax pot or something. And
the same, like we'd have a corporation tax. We paid our corporation tax today, actually. Yeah. Yeah. It's due early next week. So.
Okay.
But what was nice is we know we had more in the corporation tax than was needed. So we've now put that somewhere else, and it was the same with the VAT. Every time we get a VAT bill, it's obviously relative, but sometimes it's a really nice surprise that quarter, because obviously you're paying VAT that you can claim back on the one side. So, but people just don't get such a simple. It stops them doing that. Stops you spending the VAT.
It does. Yeah.
It stops you spending your tax.
It's so
and
easy.
if you're going into that, that's a big red flag, isn't it? Going, wait now, what's going on?
When you don't educate people on that, and you don't explain to them that it's literally not your money, you can think you're doing all right as a business within a quarter, but you get into the flow of spending money that isn't yours, and you think the mon's there in the bank kind of thing, so it's there to spend, like I'm all right and whatnot. As soon as you get hit with that VAT bill at the end of the quarter, then it's like, oh, okay, why can't I afford that all of a sudden? Because you didn't plan for it.
I mean, I sometimes love LinkedIn and I sometimes hate it, because I just think there's two people on LinkedIn, and there's one that's just waiting, just going, oh, that's not absolutely, like the grammar. Anyway, I did a post, and obviously I work in insolvency, so my posts are around insolvency, and insolvency generally is somebody that there are creditors that are going to be left short. That's a sad fact to it, but it's unavoidable in most cases. And I've had some peer in my profession come up and saying, directors should not be allowed to be directors unless they passed all, basic exams on finance. And
it's interesting.
It's fucking nonsense if you ask me. You know what I mean? It's like, but it goes back to the point. What you're saying is, we've got to. If you're a business owner and you're not good at numbers, might be your first business, to spend. I mean, I know you can get a bookkeeping package, depending on how many transactions. 300 quid a month some firms will charge. Obviously some will be a lot more, but...
Yeah, that's not unreasonable, yeah. And you can get, there are virtual assistants now and stuff like that have bookkeeping qualifications, and there's no end of self-employed UK bookkeepers out there, and that are pretty good at their job. I think that's the main thing, like going back to what we said earlier in the conversation about bookkeeping as a whole, yeah, it can just be seen as a data entry task, and it is, but you've got two different sides to where a transaction can be coded, right? So everything's got a code and it's got to go somewhere, but it's either going to go on your P&L or it's going to go on your balance sheet, right? If it's going on your P&L, it's going to affect the tax you pay. So the mistake you can make is putting something on your balance sheet that should be in your P&L and vice versa. So you can over or understate your profit. And then if you're trying to do all this yourself and you're looking at it month on month, and you're looking at a profit that's understated or overstated, how can you possibly forecast your tax liabilities? And that's where you come unstuck.
One of the things I like that I read that you put out there was customising a P&L.
So important.
Tell us a little bit more about
Okay.
that. Yeah, because imagine people who are watching this, some of them might be going, what's a P&L?
Yeah.
Not most of them won't, but
So a P&L or profit and loss, or an income and expenditure statement. So you've got your sales, you've got your cost of sales, so what does it cost you to generate that income, gross profit, admin costs, running costs, staff salaries, so net profit. Okay, so Xero, QuickBooks, Sage and whatnot, they've got a default way of looking. Sales is called sales, cost of sales is called cost of sales. It's very accounting language, and this is my issue with bookkeeping software, I think. And this is why I prefer Xero. But I think where a lot of accountants get it wrong with how they maybe deal with clients is they treat it as a tool to make their life easier, because that bookkeeping software will link into a software that they use to produce the accounts, and it's all quite nice and it's easy. But for me, bookkeeping softwares are for the business owner, not the accountant. And I think maybe there's a bit of gatekeeping involved. I think accountants are maybe scared of sharing knowledge, strangely. I don't know why, it's all a bit weird. But the first thing I do with a new client is try and understand their business, and I want them to understand their P&L. So, okay, sales, it says sales at the minute. So what do you do? Okay, I've got a website and I sell a service. Okay, how many different services do you sell? Well, 3. Okay. It would be really cool if you saw, of those 3 services, what made up the highest percentage of your sales, right? So let's fuck sales off, and let's have like service 1, 2, 3, or accounting, legal services, whatever. So it makes more sense. And then all of your costs below that are associated with these 3 services, let's call them things that mean those services, and it's very easy to see what's making more money, what's making more profit as well. Something can be high in value on the sales side, but then you look at the costs that are associated with that revenue item. Is it making the most profit? But it's the most revenue. Okay, that one's a bit lower than that one, but that's really profitable. And all of a sudden, when you structure it in that way that visually makes more sense, you've got better data and you can make better decisions for your business. So you know to put your eggs in that basket more, rather than that one that looks a bigger number, but actually that's not contributing to the profit of your business as much as that one. But you can't do that if it's very generic looking. You can maybe if you if you know a lot about your business in your mind, but I still think having the data there, if it's not there, you can't make the right decisions. Sometimes you've got to look at something in black and white rather than thinking what the crack is in your head. So data is key.
Absolutely.
Yeah.
I mean, the things you've just talked about there, like I speak to a lot of business owners, like our team speaks to hundreds and hundreds every month.
Aye.
I don't have a statistic on this, but if I ask them, and what I do ask for very regular, we'll get an inquiry, standard inquiry. Like, right, age creditors, what businesses, what assets have you got in the business? Okay.
Yeah.
Could really do with a balance sheet, you know.
Yeah.
And they'll go, okay, well, I've got one. And they'll send me their last set of accounts, which are 18 months out of date.
Yeah.
And it's like, business owners they really don't understand the scope of what a good accountancy firm can do. Because them year-end accounts, that compliance job, listen, it's important. But you can't make a decision on your business about something that happened 18 months
Too
ago.
late.
And the things you're talking about there, because we try to say to people, especially let's say someone's going through an insolvency process and like the coffee shop that you were talking about.
Yeah.
One of the things that we want to try and assist with is to make sure that the same mistakes don't happen again. And sometimes it's just market conditions, bad payer, but sometimes it's because they've not had the finger on the pulse. They've not had the separate accounts for the VAT, for the corporation tax, and it's got on top of them, and then they're seeking insolvency advice. So I dig in with people and say, well, what have you been getting done last time off your accountant? And the amount, and these aren't just small businesses. Like I was with a multi-million pound construction firm a couple of weeks ago.
Yeah.
It's a code red. There's big problems, petitions about to be served with the HMRC. And I've asked for a balance sheet and I've asked for a profit and loss. They're still doing it. The last time they did it was 6 months ago.
So construction is such a mad industry anyway to have costs nailed down because there's such a chain of funds being transferred and whatnot. And that to me, the fact that it feels like they'd be running blind. Yeah, if they can't click a few buttons and pull that off for you.
On a project by project basis, really. That's what it should be doing.
Yeah.
But I think the problem is people have this misconception that my accountant will automatically do all this for me. Like, my accountant did not provide that. Like, I asked for monthly management, he just said, we don't do that, we're not that type of accountant.
Okay.
So what are the services that a business owner should be getting as a bog standard? What are the services that you can bring to the table, Sam, that is above and beyond the compliance which just keeps you out of prison? Not you out of prison, the director out of prison.
So I guess I'll talk about maybe what I deem to be a more traditional firm of accountants or old school firm of accountants, and it goes around that compliance piece. And that's, yes, I'm an accountant, but the compliance side of things I actually find quite boring. Like, you're just reporting on stuff that's already happened, right? Like that is the bare minimum, which is what you just alluded to. As a business owner, you think, oh God, I've got to do all this stuff. I need to tick all these boxes. I need an accountant. So you don't value it straight away. I just need it doing. But I've got my business on lock. Yeah, I'm all right. I'm doing all right. I don't like working with that kind of client, I don't think, because they just value the box ticking exercise. Every client, regardless of the fee that they pay us, has a quarterly catch up as a minimum, because you don't know what you don't know, right? So even if they don't know what they want to talk about coming in, well, what I'll do with them is a quarterly business review. So either how they are productive is either you pay us to do your bookkeeping or you do it yourself. And if you're going to do it yourself, I'll show you how you do it right, but make sure you do it. So then these quarterly business reviews become productive, right? And that's our bare minimum, right? So even if you don't know what you want to talk about, well, I know what I want to talk about from looking at the numbers, and I'll have questions. Why has this gone up like this? And you might go, because we've started doing this. And I've like, let's get that separated out in the P&L then, because that sounds actually really interesting. And they might be like, I've started doing this, but I'm having trouble in X, Y, Z. And I'd be like, oh, I know someone that does that. I've got a client that does that. So say something a bit cringy, but what is it? Your network is your net worth and all that.
Yeah.
And I think your accountant, the amount of businesses they work with and stuff like that, just really lean into that.
Yeah.
Because it's mad. Unless you niche down in a certain industry and brand yourself as I don't know, a construction accountant or something like that. So many businesses. And
but it seems a bit more consultative what you're offering. It's
Yeah.
like, come in and talk to me, here are your ideas.
So
that is not the norm.
No,
it should be.
It should be, yeah, but I think it's more interesting, and I've understood my purpose as helping people, right? So, yeah, numbers are all right, and you can make good decisions off them, but if I can help someone who's at the bottle to do something for themselves, keep that dream alive a bit longer, or take it to that next level, job done, and that feels amazing to me, right? So how we're structured is being able to deal with everything from startup to maybe eventual exit and sort of everything in between. So we're thinking about the long term as well. So I'm having conversations with a client going, what's an ideal XYZ Limited look to you? Like, how do you want that to be? How do you want to spend the rest of your life? Okay, how far in the future is that? But we've got the ability to kind of go, okay, you're in this sector at the minute. Let me go away and do some digging for you. And we've got this really cool software where we can look at past business sales, and you can look at the sector that they're in, but also the subsector. So I've done it for a fitness app. It's okay, they're an app, but they're in fitness. And then you can pull out 10 past sales, and you can look at what they sold for, different sizes, but you can reverse engineer it to see how profitable those businesses were at the point of sale. So then you put together an average enterprise value, you call it. So then you can have this conversation with your client going like, well, the average multiple that you can sell for based on your profit is this. And when you put that information in front of your client and they realise what's possible, some really cool stuff comes off the back of it. And then they start thinking, oh yeah, like that's mad that's possible. How do I get there?
How do I get there? Yeah.
How do I get there? So then you start thinking, right, this is where you are at the minute. You are your business, right? So we need to maybe change that, because if you naff off into the sunset, well, you're your business, everyone's going to follow you, right? No one's going to buy that. So what do you need to develop? And we do that as well. So we put together.
And what do they need to develop? If you're talking to that sort of founder-led business, doing everything, bringing all the clients in, what are the things that they need to be doing?
They've got to have processes, everything, right? So that everything's got to be systemised. They've got to have standard operating procedures for everything, and they need to make it so. If I was interested in buying that particular business, because I think, they're doing really well, I like how they market themselves, okay, they've got a good client list, profitable as a business, okay, what happens if that business owner naffs off? Right, okay, worst case scenario, I've got to employ like an executive level person and slot them in. Okay, fine, I can factor that in when I'm looking at the profitability there, because most times directors aren't having like a high salary put through their accounts, are they? So I'm looking at a profit figure, but I know I've got a slot of salary in there that isn't there at the minute. So now what does the profitability look like? Is that something I still want to buy? So it's getting business owners into a situation where there are other people that know stuff about the business, there are procedures for everything, and it just maybe takes someone commercially minded to slot into that business to make sure it's still a well-oiled machine. And there's no information that is just purely sitting in their mind. So it's getting business owners to understand that, I think, and that's actually the hardest thing I think business owners find, taking themselves out of the doing.
Because nobody does it better, do they?
No.
I mean, that's in the head, isn't it? You know,
baby, isn't it?
I get it. I really get what you're saying. Let me let me ask you a question around that.
It.
So, not every business wants to sell, do they? And we've had people mention it to us, and actually, it's still a good idea to have your business at a standard and at a place where you might not want to sell, but it doesn't need you every day.
Yeah.
So going through this process you're talking about, it's a good idea for any business, regardless of, because some people might not want to sell, they might want to be in the business, but they might not want to be working 70 hours a week and panicking every weekend that they're not going to make payroll. what's the process you take someone through? Do you sort of give them some consultative advice of what they need to do to either get someone to come and make an offer for them, or to extract them from the day-to-day?
It's understanding what their day-to-day looks like at the minute, right? So I'll take you through a very quick example of situation that I've worked on in the past, and this isn't so much building a system to sell a business or massively take a director out of the business so he can go and do whatever. But I had a meeting with a client once, and he was quite upset, and I'm a people person, so I'm like, you know, you all right? Is everything all right? And he was upset because he was that busy that he couldn't do the school run that day, and that really upset him because that's something he really values, right? Mm-hmm. And I was like, okay, how come? And he was like, I'm just doing all these things, and I just so busy, like I'm growing really quick, and that's all amazing, but I couldn't. So I was like, okay, right, take this with a pinch of salt. How about you do a timesheet, right? 2 weeks. Do a timesheet for 2 weeks. We'll have a chat in 2 weeks' time, and we'll have a look at what you're doing. Yeah. So he comes back 2 weeks later. We have another sit-down chat, and there's so much admin shit that he's dealing with that he doesn't need to be doing. So what we did is we got him a virtual assistant to do the admin stuff, and that freed up 6 hours a week for him, and now he does the school run, and now he's happy in that moment, happy, yeah. But that unlocked a level of happiness for him, just through someone. I completely get it. Shining a light on it.
I've been there. Like write the theme tune, sing the theme tune, doing everything in your business, and you know, it's and it's that control with me sometimes. It's like, especially like with clients, I'm like, you know, I'd be involved in anything. You know, a $5,000 liquidation where we've got really big opportunities that are really well paid opportunities, and I'm chasing round after these and they're already dealing perfectly well with it, but it was just handing over the reins and going, you know what, that they're good enough at doing what they're doing, and
back them to do the job that they're employed to do, right?
No, it's I mean, it's something we think about, is like, what does the future hold? What do we want this to look like?
Yeah.
And sometimes it's not about, like for us, it's not about huge growth, but it's like, you know, we just want to have a really good, solid business. You know, I've talked to you off camera, like with a #1 rated corporate insolvency advisor on Trustpilot by Country Mile.
And that's amazing, eh?
Yeah, it's like, and our reviews are like, you will shed a tear at some of them. We really help people. Yeah. Our YouTube's been going for 5 years now. And it's like, you know what, if we just keep doing them fundamentals, because AI loves, the next game for everybody is AI, isn't it? It's like, how do you get ChatGPT, Grok, flipping, whatever, to citate you? Because they're not going accountant Manchester anymore. They're going, I'm looking for an accountant, this is my sector, I'm based in the Manchester area, I want this, that and the other. And AI will give it something, will give us some ideas.
We had someone for the first time a couple of weeks ago come to us because they found us through ChatGPT, which blew my mind. Yeah. So now we're looking at that more.
Well, there's a reason that you are really well positioned. What it looks for, it's looking for credibility. Okay, so where does it get credibility from? It goes to the review sites. Where else does it go for credibility? It's going our website, and I was on your website a little bit earlier. It's a decent site. It's quite comprehensive. There's blogs big on there. Yeah. It's going out there, and it's going, right, where can I find information that's comprehensive? And that so in answer to, I don't want to go off topic. I go down rabbit holes, mate. But I thought to myself, right, well, if we can just keep doing this, we could have like a real long-standing business that perhaps, you know, will last generations, you know. And that idea, because I mean, you talk about doing a sale and not paying any tax.
Yeah.
There was a post you definitely did about that.
Yeah,
And,
I advised a client on that yesterday, funnily enough.
okay, cool.
Yeah.
So like people looking at that, I've just gone through the process that I think you were talking about.
Substantial shareholders
Yeah.
exemption relief, yeah.
But for someone who's not au fait with this type of structure, if your statement is you can sell a business, I don't know if I read somewhere like a £5 million sale, £5 million sale,
Yeah, so
and
there's
not
no
pay any
threshold
tax.
on it, yeah.
What does it mean? Let's dig into it.
So a lot of people have a structure where they have a trading company and they're a shareholder of their trading company. So all we're doing here is we're thinking about the future a little bit, and let's say you did want to sell your business. Well, what do you want to do with that money, right? So yeah, if you want to piss it up the wall, so to speak, and do X, Y, Z with it, and maybe what I'm going to talk about now isn't valuable to you. But for me, if I could sell a business for a decent sum of money, I'd be thinking, right, what can I do with that money that's going to support how I want to live my life? So my brain goes into how can I make that money make me more money?
Mm-hmm.
Okay, so if I introduce a holding company now into the conversation, now rather than trading company and Chris, we've now got trading company, holding company, Chris.
Mm-hmm.
Yeah, so the holding company owns the trading company. So therefore, it's the holding company that is selling the shares in the trading company, not you. If you were to sell your shares in the trading company, you'd be exposed to capital gains tax, right? And you'd get shafted in tax because they've proper stripped back what used to be called entrepreneurs relief. It's now business asset disposal relief,
Yeah.
and it's now not so favourable to business owners and whatnot. And that's a different conversation.
We can have an hour on that afterwards.
Don't
worry.
different conversation, and a lot of people are very annoyed by it.
But I think you're getting shafted is a pretty good assumption at the moment from all angles.
But a holding company, if it sells its shares in the trading company, it potentially qualifies for substantial shareholding exemption relief, and what that means is it pays no tax on that sale. The situation you've got now is there's a bucket load of money in a bank account that is just sat there. So if you draw down that money, then you pay tax on it, right? You might pay dividend tax on it. You could liquidate that business and then, again, pay tax on it. Or another alternative might be, why don't I invest this money that's in my bank all of a sudden? Why don't I invest in other companies? Why don't I buy property? That kind of thing. All these things that might be cash flow generating assets. So you're locking money into things that are hopefully going to appreciate in value over time. That 5 million that you've got could turn into 6 in 5 years' time.
Obviously this isn't financial advice, it's all hypothetical. If you had a sale away for 5 million quid, right? First question is, what type of return do you think you could get on it? And then I'm going to ask you, how do you think you would get that? What would you invest in to get those types of returns? Hypothetical, I'm not holding you to it.
Yeah.
But it's something you've thought about, clearly, isn't it?
Yeah. So obviously I'm not a financial advisor, but it's something I'm super interested in. But property prices are just going up and up and up, aren't they? And I can't see into the future, but dependent on where you're invested in, like Manchester, for example, they're knocking up high rises left, right and centre, so it's obviously a very popular area. Mm-hmm. It's obviously something or an area that people are invested in quite heavily. So it'd be safe to assume that over the next 5-10 years, I imagine property prices in Manchester will continue to rise because it's quite an interesting city, right? If you were to buy property in Manchester, I'm not going to stick a percentage on it because I don't know, but it'll be more than what you'll get leaving it in a bank account and just hoping for interest because for one, inflation outweighs interest. So if you leave it in a bank account, that 5 million, your buying power in 5 years will be lower.
Yeah,
because inflation's more than the interest. Whereas if you lock it into something that beats inflation at best, well, you're better off, right?
Of course.
But I'm really interested in stocks and shares and stuff like that, and ISAs, and look, anything that tracks the S&P 500 as well, so your top 500 companies in the US, that's averaged over the last 30 years 10% growth, which is wild.
It's incredible, isn't it?
It's incredible.
And it's the most boring fund you could ever do. It's just go, S&P 500 tracker, leave it.
People are scared of it because they're like, the stock market, and I'm going to lose all my money. Well, history tells us that all these bad things that have happened in the past, the market always recovers.
And just a disclaimer, you could lose all your money.
You could lose all your money.
But it's net, even with all these wild swings that we've had in after 2020, the world got locked down.
People made so much money because other businesses flex and all of a sudden do well from those things as well. And it's wild how the world works. But if you're in a position where you were losing all your money, I think the world's pretty much ended, because it's the biggest companies in the world, right? You've got bigger problems. But there are a few things. They're just some ideas.
One of the things that I think I actually first noticed you is when you were talking about directors' loan accounts.
Mm-hmm. Okay.
So, and I'm going to tell you how bad they are in my line of work. Like, they are the devil. They cause huge problems.
Yeah.
But not everyone watching this is going to end up in insolvency. Okay.
Yeah.
Can you explain in the easiest of terms, at sort of 10-year-old level, what is a director's loan account?
Okay. So think of it as this imaginary bank account, and essentially it is, you're looking at whatever money you've put into the business less whatever you've taken out of the business. So if you put £100 into the business, it'll show in the company's accounts under what is called the director's loan account, or you might want to call it Chris's bank account, that because you've put £100 into your business owes you that £100 back. Yeah? If you take £100 out of your business, then initially it'll show in the accounts that you owe that £100 back because you've taken £100 from someone that isn't you. You might want to write that £100 off and call it a dividend at some point, yeah, if there are profits in your business. But that is essentially what it is. It's all the money that you've put in. If you put more money into the business than what you've taken out, then you are owed that money, and you can draw down from that money in the future and not pay any tax on it, because it is money that is owed to you anyway. If you have taken more money out of the business than what you have put in, then you're going to have some personal tax implications perhaps. Yeah, there's this whole thing with running a business in the way it's meant to be run in the best interest of the business, and there are certain rules. So if you're going to take money out of the business and that money is more than what you've put in, you've got some decisions to make over a period of time. You can't just let it sit like that forever, otherwise you will get penalised, right? It's called like bed and breakfast in your business, so it's detrimental to
Let's
the business.
get into that, because people do not know what that is.
Yeah.
Give us an example of bed and breakfast, and it sounds like a weird sex act, you know?
Yeah, weird, and I don't know why it's called that, to be fair, but yeah.
It might just be my mind. Jed's laughing. He's got the same type of mind.
But essentially, what it is taking money out of the business and it being detrimental to the business, right? It's going to affect the running of the business. So when you take that money out and you owe that money back to the business, you have 9 months to do something about it. So you either pay it back within 9 months, you say it's a dividend and therefore you pay the personal tax on it because it's a distribution of profit. But sometimes people don't have that pot of profit that they can take from, right? So I'll take one step back. A dividend, by definition, is a distribution of profit. If there's no profit, you can't pay a dividend, right? That's where people go tits up, because they see money in the bank and they think that's what I can take.
Yeah.
No, it isn't. So if you haven't got the profit, it's a director's loan and you owe that money back. If you don't pay it back, you pay Section 455 tax.
How much is that at the moment?
33.75%. Big chunk.
And where does that actually is added on corporation tax, isn't it?
It is, yeah. So it's a withholding tax. So it gets chucked on top of your CT bill for the year. So it's a chunky percentage, eh? When you repay that director's loan account, you can get it back, but it's a pain in the arse.
If you repay it.
If you repay it. So you've either got to somehow have the money personally to then chuck it back into the business. People end up getting loans and all sorts to get that money back, and then you start loan stacking, and again we're going into other things now, or you're hoping your business is now going to be profitable and you can whittle it down through declaring dividends and now paying more personal tax on it to then get the tax back that you want to pay.
You're screwed either way, aren't you?
Yeah, you are, yeah.
And for me, it's like, if you are, because I presume you tell your clients to take minimum salary, top it up as dividends.
In most cases, yeah.
Yeah. Now, if you haven't got that monthly management information, I know you mentioned quarterly, but I'm saying to business owners out there is I want stuff monthly. You know that's.
So I'd advise people to have monthly management accounts if they want black and white clarity on the decision making. Quarterly meetings for people who are bridging into that space.
Yeah, I get it. And do you know what? Most people don't do that. So the fact that you do, it's a safety net of 12 weeks, isn't it? I mean, how much damage can you do in 12 weeks? But for me, like, because the consequences of having an overdrawn loan are pretty catastrophic, whether you continue to trade or you end up in insolvency.
Yeah.
How on earth can people judge what to take out every month? You know, they're just going, they call it a dividend. Like, I'll say to somebody, right, Sam, okay, right, you haven't got any management accounts, right, let's have a look at your last set of accounts online, send me that over. Right, you've got a 50 grand overdrawn loan account 18 months ago. Yeah. I says, what's happened since then? He says, I don't know. I said, how do you pay yourself? Now, bearing in mind, this guy's hypothetical, he's been insolvent for 12 months at least because he's not paid his last corporation tax, he's three VAT quarters behind. And he'll go, well, I take £1,000 salary and the rest I take as a dividend. I'm like, you've got a big problem here, sir.
Yeah.
Because that dividend isn't a dividend, it's a draw in anticipation of a profit.
Why has his accountant not told him that?
Exactly.
Yeah.
Because this is the guy that only goes to see his accountant once a year. Now, this guy's got problems either way.
Yeah.
If he tries to fight it through, he's got a whopping great tax added onto the corporation tax. If he ends up with insolvency, the insolvency practitioner is going to ask him to pay the overdrawn loan account back. And it's not 50 grand that was in the last set of accounts, it's probably 100 grand because for 18 months he's been taking 3 grand a month that hasn't
just been building up and up and
exactly.
up.
And people don't get, I mean, I get a lot of negative comments for how much detail I go into with directors. Like in my industry, some people will say, well, we don't say that because it'll spook them putting it into liquidation. It's outrageous.
Yeah.
It's like people's lives like are on the line. Absolutely. Yeah. And it's like, that's the first thing we do is going, right, you can't change, sometimes someone's hurtling to liquidation. You can't change the fact that they've got to go for an insolvency process. But you've got to tell them where the minds are and go, listen, this is what's going to happen to you. As a result of this insolvency, you're going to be asked to repay it back. Now, I think if people understood how dangerous these things could be at the start with better financial advisors, there will be less problems down the line. So what is the worst mistake you've seen directors make with directors' loans?
Exactly that. So having clients that, I've got another example of a restaurant that I've worked with in the past, and the business owners, shareholders of the business they take more of an investor approach rather than being involved operationally with the business. So they entrust a head chef front of house to run their business for them. And that's all well and good, but those two people aren't maybe naturally commercially minded, be very good at doing what they do. But then all that impacts the ultimate business owner, and he's drawing money from a business where there's money in the bank and whatnot. But that business wasn't profitable. So then again, similar to what you've just said, he's drawing money from a business and he's building up a director's loan. But then you're trying to get in front of him and he's swanning off all around the world and he's got this restaurant and he's here, there and everywhere. He's this business owner, but he's proper burying his head in the sand. And it's weird. Like I don't know whether it's literal burying the head in the sand and just parking the issues and things will sort itself out. I don't know, but I couldn't get in front of the bloke. I think completely unresponsive.
Listen, I see this all the time. And
liquidated.
Yeah.
They did.
It doesn't get any better. It's like, it's like toothache. Like toothache doesn't go away unless you go to very few people, certain sectors anyway, you take the inquiry and they will be the miles behind. Like, I think we touched it, you can be insolvent, okay, and that doesn't mean you have to pull the doors down.
No.
Because the chances are, we talked about construction, in quarter 3, quarter 4, retentions are going to drop in. They've got big work. It's going to level itself out. A lot of businesses, though, there's no hope of recovery, and they will they'll just ghost you. And I train people, say, listen, we'll email them weekly with information. We try and get hold of people. But you can't force them. And that's the problem. Like, they are there. They're the directors. It's at their pace. And this is the problem, though. When they bury their head in the sands, they're normally making creditors' positions worse. They're not paying the next VAT bill. They're not paying the next corporation tax. They're now not paying PAYE. They're racking up bills for suppliers. And when the house of cards comes down, whether it's a voluntary liquidation, which is what they should be doing, they should be going out. The Insolvency Law Act says you can go out there and find an insolvency practitioner that you choose.
Yeah.
They're not going to work for you. They're going to advise on the company. They're going to represent creditors. But that's always better than HMRC coming in with a winding up petition, and then the official receiver's going to investigate you. Like, people just, I
You're on the
don't
back
think.
foot from the off, eh?
Well, and I don't think either they don't want to face it, and I sort of get that, or they really don't understand. I've got one on at the moment. He's had 2 winding up petitions. Like, this guy, he told me, he said, Chris, I really don't want to lose my house. He's got a big overdrawn loan account. And I've just said, listen, you have to do this voluntary. You have to go out there and appoint, because at least you've got an element of control there. You are choosing an IP. And he's just gone into hiding. And his petition's in the middle of October. And it's not just that. The official receiver finds things that every director's going to get an investigation, Sam.
Yeah.
Every insolvency practitioner, no one can.
Is that guy's house at risk?
I think so. Right. I think it is either way.
Yeah.
I really do think it is either way. But when you do it voluntarily, an insolvency practitioner is more minded to do some type of deal and settlement, because they don't really want to do. It's got to be commercial. They don't want the risk of taking someone 3 years down the line to make them bankrupt.
Yeah.
Because a lot of cost associated with that, with no guaranteed return. But the official receiver is a public body. It's like they've got a bottomless pit of money. But yeah, it's just because that's what we've always tried to do. Is like, our content is that. It's not to frighten anyone. It's like, this is real life. You've got, the earlier you act,
sometimes you've got to shock people into action, haven't you?
But one of the things that I'm glad you touched on about your restaurateur who's, lives the life. Budgeting, okay? Budgeting for your business, budgeting for personal. What's your personal approach to budgeting for Sam and also for the business?
Okay. So, me personally, like, I do a cash flow forecast myself. And I think about the money that I'm coming in, that is coming in every month. Like, I've got all of my sort of stuff that comes out my bank every month, and then you've got all of your things that you want to do in the future, right? And the same principle applies for a business. So my little spreadsheet that I've got is balance at the start, balance at the end. Before that balance at the end, I've got my things that I want to invest in. So I've got my stocks and shares ISA. Sometimes I do premium bonds, sometimes I put into savings, that kind of thing. All that comes out, and that's factored in, and that's a constant every single month. So I factor that into what are my constant expenses that leave my bank every month, and that's a non-negotiable for me. But the same thing should be the case for businesses, but of course you have a few other things to bear in mind. One of the most complex businesses I think to think about, and that I do this with, are restaurants. Because you've got so many things to factor in, and it can be quite a hard task putting a cash flow forecast together. You might have an element of seasonality. You've got different margins on different products. You've got different levels of staff that you might need to have during different periods, and it becomes quite a tough task, right? So I would start from pricing, to be fair, and analysing whether someone's pricing is correct. Are they hitting the right margins that they set out to be hitting? And then from there, you filter down. Why I say restaurants are so hard to plan for and manage is because it's really not unreasonable to say that for every £100 that comes in, for a very well-run restaurant, you're only left with £5 of profit. And when you say that out loud, and that's for a well-run restaurant, that's wild. That's wild, right? So that really emphasises that cash flow is everything. If for every £100 you spend, you get in, you only get £5. Cash flow is everything. And there are so many restaurants that don't produce a cash flow forecast, which is baffling. And I think a lot of restaurants fail either because they don't do something like that and they don't think ahead enough, or from a marketing side of things, they don't know how to sell their story best, don't know how to sell the experience. Yeah.
Profit driver tree, okay?
Yeah.
We're coming towards the end of the interview now, but it was something we spoke about before we got on camera.
Yeah, sure.
And I thought, right, I've missed that when I've been stalking you. Talk to me about it. Really interesting.
It's really cool, right? Because you can say, I don't know, a lot of startup businesses, I say, what do you want to do? And what's your short-term goals? And they're like, I want a 10k a month. Okay, well, what does that mean? Just saying you want to do a 10k a month. How are you going to do that? So a profit driver tree is a way of selecting more qualitative things that are more easily trackable than just saying you want to hit a 10k a month. So profit, and it's like, well, what's driving profit? Margins, so your cost of sales, and sales. Okay, what's driving sales? Number of customers. Okay, what's driving that? And then you might go off like average spend per customer, and that might be a branch off number of new customers. So in that section, how do you increase your sales? Well, you either get more customers or you increase the average spend per customer. So it's like, how do I increase the average spend per customer? For a restaurant, it might be how many drinks they buy in, how many courses they order in. For new customers, it's like, well, where are those new customers coming from? Are they coming through the website, inbound, outbound? Okay, your inbound customers, where are they? So you get the point, right? And you keep going, and you end up with a bunch of phrases on the far right-hand side of a page that ultimately are driving profit, but they don't mean profit. So rather than just saying, I want to get a 10k a month, well, it looks like you need to track all these things on the right-hand side. You're not going to track all of them because then it's unproductive, right? But based on your current scenario and maybe what you're not thinking about at the minute, let's sit down and talk about 4 or 5 of them, and let's track them month on month. And there's an argument that if you choose the right ones and you put together a bit of a KPI dashboard and you track them month on month, you don't even need to look at a profit and loss, because if these numbers are going in the right direction, you know your business is going in the right direction, and ultimately that will get you to your first 10k a month, picking the right KPIs. Yeah. So I think it's a good exercise, and it really gets the juices flowing.
So we're going to wrap up.
Been a pleasure.
Best coffee in Manchester.
Ooh. So they actually have a coffee shop as well, but my first introduction to them was walking along the canal, and they've got this little green truck, and it's Spice and Grind. That's my favourite coffee. Okay. Spice and Grind.
And whereabouts in Manchester? I'm there this weekend, so yeah. I might give it a go. Whereabouts is it?
So there's so it's just off Deansgate, and there's an Indian restaurant called East.
Yeah, I know exactly what you mean, yeah.
And there are some steps by East, and you walk down the steps and then you're on the canal. You keep going, and then there's a bar called Menagerie. Opposite Menagerie, there's a screen trailer. Okay, Spice and Grind.
Cool, as recommended by Sam Millward. If you was not an accountant, what would you be doing?
Wow. Big question. So
I thought you've answered everyone really good. I want you to struggle with one on camera and squirm a bit. You've been a great guest.
No, I appreciate it. So something that I'm working on actually is I've started a body wash company. Okay. So completely random from accounting, but my partner in life and in business is a doctor of chemistry. So she works in the drug regulation space. Cool. she's very conscious of what she puts in and on her body, and we're looking to release this body wash business. Different answer to what you asked. Like, I've never really grown up wanting to be something, I don't think. When I studied, I didn't go to uni, so the A-levels I picked were biology, chemistry, physics, and then Spanish. It's very science-based, but Spanish thrown in there as well.
Wow, yeah.
I still speak a bit of Spanish, but I've never really set out wanting to be something, and this might sound quite deep, but I think I've always wanted to do something where I feel like I can help people and and have a bigger impact. I've been guilty of being a bit of a people pleaser in the past, something I'm trying to work on myself, but I like feeling like I'm helping people. So it would always need to be something around that, and ultimately for myself, what I want from my life is, when people ask, are you happy? And sometimes it's a difficult question, yeah? Mm. I think it's unrealistic to be happy all the time, because if you can be happy, you can be sad.
Yeah, you're right.
What goes up can come down. So just a level of contentness, and I just want a peaceful life, not
listen,
up and down.
peace, man. Touch on that, yeah?
Let's go.
For people who want to find out more about you, maybe want to talk to you about assisting with them, where can they find out more about you and your firm?
Yeah, so we are accounts and legal. Our biggest office is in Manchester. We've got one in Liverpool, got a small one in London, but focus a lot on our SEO, so we're quite high up in Google rankings. If you type in accounting in Manchester, London, we're on the first page, or you can find me on LinkedIn and just drop me a message, and happy to have a chat, even if it's just a chat about how's your business going, and I can give you a bunch of free advice and maybe give you some new ideas. Just give me a chat, drop me a message.
Sam, you've been a great guest. Thank you so much for coming
Cheers,
over to see us.
Thank you very much,
Take
mate.
care, buddy. Thank you.
You too.